I'm glad you're with me. My name is Mike Campbell. Well, that was a heck of a way to end the week. Reports of a new South African variation of COVID-19 spooking the markets, along with several countries locking down their borders to flights from South Africa. And it couldn't really happen at a more inopportune time because so many Americans are away from the office on their 4-day Thanksgiving weekend, and that created some liquidity problems. I'll have more on the market reaction and maybe what you should do about it with Victor Adair and BT Global's Paul Beatty in just a few minutes. And by the way, BT Global's growth fund is up 23% this year after a stellar 65% in 2020. But here's the thing. Paul promises to share the name of a stock we're all familiar with, but it's not receiving any coverage, despite offering what Paul says may be the best value on the market. Plus, I've got Ozzie Jurek. He's going to drop by because I want to talk about a couple of big issues for people either looking for a mortgage or renewing one that's come in the aftermath of the devastating floods in Southwest BC, along with rumors of changes to the stress test. But first, I want to talk to you about an issue that comes up with some regularity. But let me explain first with a couple of questions. What impacts your financial situation the most, outside of maybe losing your job or a serious health issue? Is it rising food prices, gas prices, home heating prices? Is it interest rates, or all of the above? What about the biggest financial windfall? Well, I suspect for the 65 to 70% of Canadians who own their own homes, it's a huge jump in prices. But here's the point. I get asked regularly about something like what's gold going to do, or where do I think real estate prices are going, or what about oil or silver, interest rates, the dollar, stocks, the economy in general. My question is, do you think it's possible to analyze and forecast any of those things without taking into account government actions, whether it could be a new regulation or potential tax changes or whatever? I mean, look at the oil price, hit hard Friday by the new border and airline restrictions in some countries. In a few minutes, I'm going to chat with Michael Levy about the Biden administration's push to lower prices by releasing oil from the Strategic Petroleum Reserve. My point is, how can you forecast oil prices without looking at politics and government policy? I mean, right now, we're looking at big moves in things like Bitcoin, collectibles like baseball cards or non-fungible tokens, and of course, stocks. They're all impacted by people's reaction to the massive increase in government borrowing and spending, along with central banks manipulating interest rates. It's the same with real estate. I mean, government regulations on average add about 25% to the cost of new homes. So how can you discuss where real estate is going without taking into account what governments might do? I mean, you want to talk about where stocks are headed? Well, first, better take into account government tax policy and interest rates. When it comes to big tech, let's see if government decides to implement new regulations. I mean, it should be obvious why in analyzing and forecasting any investment or the economy in general, for that matter, you have to take politics into account. As I said, obvious. So why am I talking about it? Well, because I hear regularly from some people who say they wish I wouldn't talk about politics, which I try not to, by the way, because it offends some people. But more accurately, I think they're angry if I say anything that even hints at offending their political loyalties. Some are polite. Some say I wish I wouldn't talk about politics. Others are rude. Others go so far as to say I shouldn't even be allowed to. But given I have trouble believing that any of them think it's possible to talk, analyze, forecast any of the things I just mentioned without taking into account politics and government, well, I think they understand that, but I suspect what they really mean is don't say anything negative about politicians or parties I support. Now, let me be clear. They're welcome to their political affiliations. I mean, gosh, they could have a potato salad statue of their favorite leader in their bedroom for all I care. But it's ridiculous to suggest you can analyze any investment or any aspect of the economy or like inflation or debt problems without talking about politics and the policies that created them. And with the Build Back Better / climate change agenda, well, it spells out more regulation, more taxation. The role of politics is going to be even more pronounced. And I better add on the impact, things like sovereign debt too, or the evolving monetary crisis, along with currency moves. So if your political loyalties are your priority, I say good luck to you. But it won't serve you if understanding economics or finance, let alone anticipating where any investment is going. But it's clearly too difficult for some people, given as well-known analyst John Malden observes, in quotes, We believe what we want to believe because to do otherwise would upset our world. The potential emotional stress of any contrary opinion is too much for us to deal with, end of quote. Well, of course, it's your choice to prioritize your political preference above all else. But I just wanted to warn you, it's an intellectual straitjacket that is completely inadequate for understanding investment, understanding economics, understanding finance. And it's also an excellent way to lose money investing. Because you know what? Here's a tough one for some people to understand. The markets can't care less what you think or what I think. Our job is to anticipate what a collective group thinks. That tells you where the market's going to go. Anyways, just food for thought. Sorry, I got to keep talking some politics. I hate it because some people are pretty nasty about it. But that's an explanation why. Hey, coming up, as I say, I've got lots planned for you, but I also want to give you a little heads up. Today, we start the giveaway of a 1-ounce maple leaf coin for people who buy their tickets to the World Outlook Conference, but I got to put a proviso on that. It's only 100. I only got 100 of them thanks to Border Gold, who promises me they're working on getting us some more. But right now, I've got 100 silver 1-ounce maple leaf coins for people who sign up. Just go to mikesmoneytalks.ca. Well, one of the big stories this week, actually, it was a buildup over a couple of weeks, and it's kind of the irony of this, is President Joe Biden first asking OPEC to increase their production. They didn't get any response there. So now the debate turned to whether they were going to release millions of barrels of oil from what's called the U.S. Strategic Petroleum Reserve. But all of it is to sort of slow down oil prices and reduce gasoline prices, because that's not politically expedient for them. It's not beneficial at all. I want to bring Mike Levy in on this and chat with him for a moment about it, because it was such a big story. Mike, again, I just find the irony is delicious with coming out of COP26 and then turning right around and saying, gee, those oil prices are a little too high.
Mike, I just shake my head because here we are cutting off every available source for oil for the United States, including internally, where they don't want to produce anymore. They're not spending no capital expenditures. They don't want to expand the amount of oil being produced. But by the way, let's open up the strategic reserves in order to help alleviate the problem. And that's a story in itself. And by the way, let's ask OPEC to produce more oil and put it on the market. But this 50 million barrels of oil being made available from the U.S. Strategic Petroleum Reserve, that's a little more than a half a day's supply for the U.S. And by the way, that Strategic Petroleum Reserve is in place. It started with the Arab oil embargo back in the 70s, and the U.S. didn't want to be caught without oil, so they put away about 600 million barrels of oil in the Strategic Reserve, and now they want to borrow from it a half a day's worth to help gasoline prices go down.
Yeah, just to make sure we have the context for this, in the U.S., they used in September about 21 million barrels a day of oil. Globally, we are in that 100 million barrel a day sort of ballpark. So when you talk about releasing 50 million, as you say, Mike, that's about half a day's worth of use of consumption. But they're not the only ones, too. I mean, we've got other countries this was a coordinated effort, at least throwing I think about 22 million other barrels into the marketplace over time.
Well, there was South Korea, Japan, Great Britain, India, and China was going to come along and be part of this announcement, but they've backed off now because they do not want to be part of anything that the Western nations are doing, seem to be doing it in a coordinated way. So they probably will add some oil to that, but they're going to do it on their own. They're not going to do it with the group.
I think the message here, though, is that, the market was anticipating more than just 72 million barrels or 50 million coming out of the U.S. alone. And that's why the reaction was, first, we got this drop when the rumors started to hit. You watched oil prices come down. And yet once they announced it, it's the old buy on rumor, sell on news kind of thing. Once the news came out, the market seemed to be disappointed, or at least saying, hey, that's much ado about nothing when you point out those sort of daily usage statistics.
Well, they've done this 3 times, Mike. They did it during the 2011 war with OPEC member Libya. They also sales took place from the reserve during the Gulf War in 1991 and after Hurricane Katrina in 2005. But just as you say, I mean, buy the or sell the rumor, buy the fact, buy the rumor, sell the fact. The fact is, during Hurricane Katrina, the U.S. released oil from the reserve. Even with the release, oil went from $50, this is after they put more oil on the market, to $95 a barrel in the space of under a year. So it didn't even have a cosmetic effect back then.
I'll talk to Victor later about sort of the traders on this, but let's talk about as investors. I mean, the bottom line is after, it's the old Shakespeare, much ado about nothing. After all of the reports we got, this has just a very short-term move, I think politically motivated to show that in the U.S., for example, President Biden is worried about these record gas prices in some areas, high gas prices everywhere. They're worried about home heating as we are coming into that season in earnest. It's the old politicians want to look like they're doing something, like they care. And I think that's all that this is about. It doesn't do anything to alleviate the long term. As you just said, Mike, no capital investment, demand increasing. Presto, economics 101, you get higher prices.
And 1 year from now, almost not to the day, but one year from now is midterm elections in the United States. And the Democrats have enough voters mad at them today that are going to get even madder at them if oil prices continue to go up, if gasoline prices continue to go up, and will again question why the U.S., which was one of the world's largest oil producers, has stepped right back because of the environmental pressures of the progressive left, let me put it that way, and it's just going to cost people more money out of pocket. Not that the demand might going into next year isn't going to be significantly higher, because it most probably is, but at least they could alleviate it somewhat if they put some of their own supply from the ground instead of the reserve into the market.
But as you say, the political calculation on that also has a big cost, so I doubt we'll see that. Mike, maybe we'll be here to chronicle that a year from now. We see what the impact is on the midterm elections. My good till date's up, I think. I was checking just this morning, but you'll certainly be here. Mike, thanks for taking the time. Have a good week.
Thanks, Mike.
Time now for the quote of the week. Chris Sankey is a member of the Coast Tsimshian First Nations, Indigenous Canadian and principal of Blackfish Enterprises, who this week gave voice to First Nations people, who are rarely heard in the media and drowned out by a lot of the anti-resource agenda. He states, these activists from outside Canada who are collaborating with university professors and non-governmental organizations from Ontario and British Columbia are not our friends. Nobody in their right mind would seek to damage their own people and Canadians at large. I'm proud of the fact that on Money Talks, we have for years, well before you ever saw it, decried the racist assumption that all First Nations and Métis think alike, as was implied by much of the media coverage when you're parroting the talking points of opponents to Northern Gateway and Kinder Morgan pipelines. That assumption finally became untenable when so many First Nations and Métis who work in the resource industry, including oil and gas, and who see the resource sector as the only way out of poverty for their communities, they finally got some voices there. So finally, when the debate turned to Coastal GasLink, it was acknowledged that there were both supporters and opponents, which brings me to the quote of the week by Chris Sankey, in quotes. To all of you non-Indigenous people and paid activists alike who follow individuals from non-government organizations into these protests, you are deliberately humiliating our people and weaponize our history by dividing our communities. You drum our drums, protest outside the legislature buildings, and burn flags. You think you know all about our hereditary systems and protocols, but clearly love to disrespect them. Let me be one of thousands to state again, you know nothing about our systems. I'm sick to death of the divide you have caused between our hereditary and elected leaders. You have done nothing to help advance reconciliation in our province and country. You make a mockery of our culture and communities. You continue to damage us as people, take our economic opportunities, trample on our rights, and kick us to the curb when you're done. I hope you're proud of yourself. End of quote. It seems like, well, it might be every day, but certainly every week I read about another cyber hack. I mean, it's clearly a huge problem. I mean, there's a problem when there's foreign actors involved, problems when there's people trying to get ransoms, that kind of thing. I think we're familiar with some of the stories, but maybe you're not as sure about, there was a big cyber attack in Newfoundland, cyber attack in New Brunswick. This isn't just stuff that happens outside our borders. So I thought I'd get our resident expert on this for cybersecurity. Ian Patterson is the CEO of Plurilock. Ian, first of all, appreciate you finding time for us. But I know it's one of those broad questions, but I can't believe that you are not busier than ever, because this stuff seems to be everywhere. As I said, I just gave a couple of Canadian examples, but man, I don't have to work very hard to find others.
Mike, first, great to be back. And you're absolutely correct. Cybersecurity just seems to be more and more important. The two recent cyber attacks affecting Canadians that have really been well publicized. The first was an issue in Newfoundland where bad guys were able to access the last 14 years worth of medical records from patients in that province. That data breach is still actively being remediated and resolved. And the second, which we heard just a little bit more recently, the municipal network in St. John, Newfoundland, was knocked offline for almost 2 weeks. And so that affected obviously the workers in the city, but it also affected their emergency dispatch system. Now, I mean, if you can imagine, there's no reason why that couldn't have happened in British Columbia. And imagine if that happened over top of, let's say, the Abbotsford, flooding issue, that could have been really disastrous. So Newfoundland, it's reported they've spent nearly $3 million trying to recover from this attack. These are real problems faced by real businesses, by real communities that affect all of us.
And we hear about them trying to extort money and, things like this. I mean, is there a way of sort of summarizing, categorizing rather, the type of cyber attack or the people who are behind it, I guess I should say?
Well, it's interesting because what we're seeing is a sophistication on the behalf of the attackers. And so what might start as a run-of-the-mill malware incident might evolve into a ransomware incident. So BlackBerry Research in Motion just recently came out with some research around the proliferation of access brokers. And so this is where you'll have one bad actor, one threat group. They will compromise a network and then they'll sell that access to somebody else. Now, selling that access to somebody else might mean that they deploy ransomware. It might mean that they steal the data. It might mean that they take that network or those systems offline, conduct what's called a wiper attack, where their goal is actually just destruction. And so you can have multiple different stakeholders or different parties who are interacting in the digital environment with slightly different motives. But what can start as one attack can actually morph into another as more of these actors get involved.
And I guess there must be a huge market for, like, let's say this group does the hack, but they get my personal data, my personal information, then they third party it out, then they sell it. That's how they make their money, is to selling it to people who didn't actually do the hack.
You're absolutely right. Cybersecurity and cybercrime in particular is big business. Identity theft has been around for many, many years. And what started as fairly low-level credit card numbers being bought and sold has now morphed into millions of records being sold at a time. In fact, to the point where these records are actually becoming really cheap to buy because there's so many of them available. I mean, you can go online to some of these dark web marketplaces and be able to purchase individual healthcare records, social security numbers, credit card numbers for very low dollar figures, dollars or potentially tens of dollars. I mean, these things are not expensive. And they're traded at such volume that data is just going back and forth all the time.
Let me ask, about Plurilock, because you're, and not a surprise, very respected in the business, but your customer base continues to grow because the problem continues to grow. But tell me a little bit, I want to pat you on the back because this year you guys won the Cybersecurity Breakthrough Award. Tell me who's coming to you. I mean, is it government organizations? Is it just Canadian, American? Who's coming to you?
Well, we're very fortunate to be in the position that we're in. I'd say over the last 2 quarters, we've really seen tremendous increase in the business that we're doing. We've just recently put out our Q3 financials and year-to-date revenue of approximately $23 million. Now, to your point, who needs services from us? A lot of government organizations. So we do quite a lot of business with the U.S. federal government, as well as the California state government. California, of course, being one of the largest economies of the world just on its own. But we've also seen interest and desire from institutions internationally as well. We closed a large $600,000 contract with an overseas financial institution that sought us out specifically because, frankly, they just needed the capabilities that we have available. So there's a lot going on, both on the bad guy side as well as on the good guy side. What we're doing here at Plurilock.
I got to tell you, the one that jumped out at me was the FBI, Federal Bureau of Investigation. They got hacked. You'd think they'd have the top security in the world, sort of thing, but they got hacked, and there was unauthorized spam, what do you call that, emailware sent on their behalf. My goodness gracious. It's, if the FBI can get hacked, who can't?
Well, and embarrassingly, they had to then send out an email saying, please beware of emails coming from the FBI. So you're absolutely correct. I mean, even the most well-funded organizations that are out there are constantly finding themselves flat-footed. And I think that for companies in the cybersecurity space, like Plurilock and like others, it's just a constant reminder that what we are doing matters and really can have a monumental impact to be able to help our customers.
Yeah, let's talk about individuals just for a sec. What should I be doing, or what should I be aware of? I mean, because obviously we've got tons of people listening, and they've read the news like I have, they've seen the stories, et cetera, and they've seen, it's measured, as I say, by the performance of a company like Plurilock. But what about as individuals? Is there something I'm doing that's really stupid, or something I can do to really protect myself?
If you can do a couple of basics, then you're going to set yourself apart from the rest of the pack. The first thing that you should do is you should try and not reuse the same passwords. Now, this is difficult because we type so many passwords in through our daily life. Now, on a business front, this is actually part of what Plurilock helps solve. But for individual consumers, try and use different passwords for different websites, for different applications. The reason for this actually goes back to the first thing we were talking about, which is that data gets bought and sold. And guess what? Passwords are part of the data that regularly gets bought and sold. So if I log into website number 1 and I use a password, we'll call it Ian123. If website 1 gets hacked, well, suddenly those passwords now are in the hands of the bad guys. And the bad guys will actually attempt to use those passwords at websites 2, 3, 4. And in fact, they'll use the same username that I used for website 1 in website 2, 3, 4, and they'll try those passwords. So if you can have different passwords, then you eliminate the bad guy's ability to conduct that type of attack. So use different passwords. Now, the second thing that you should do relates to the first one, which is it's hard to keep track of all those passwords. So try and use a password manager. There's a lot of them out there. Some of them are built in by default into Windows, into Mac devices. But if you can use a password manager, you really ensure that you're using different passwords. And so again, you can be a little bit safer. The third thing is when it comes to logging into websites, anytime you have the option of using a text message or a one-time code or any type of two-factor authentication or also what's called multi-factor authentication, you eliminate the risk even further. And so if you can do those things, again, you're still going to be playing in this ecosystem that is a bit dangerous, but you can really dramatically reduce the risk that you face compared to others.
Yeah, I mean, it's wonderful advice. And it's the type of thing I see in the financial side of things all the time. That, for example, I mean, sort of the equivalent is it's easy to do, update your will, something like that. And then we don't do it. So, I mean, that kind of advice is fantastic. And people should take the 5 minutes only it takes to review what you're doing in that way. And just the other thing I want to mention, Ian, is that you guys are doing a webinar on Monday at 3 p.m. Eastern. So obviously that's noon Pacific. Perlock is hosting a webinar at that point, and we'll put it up on Money Talks, mikesmoneytalks.ca, so people can be involved with it. And, just for investors to have a look at, because, this is a field that I'm proud to say we've been talking about it. Jim Dines, remember, talked to us about it years ago. We talked to Plurilock when you were just starting, and now look where you are. And, it's just a field that offers huge investment opportunities. And unfortunately, because it's a problem that continues to be so prominent. And that's why I appreciate you finding time for us, Ian. I know, busy as you are, you're always reliable for us to come and just give us an update and help us out with our own personal security.
Thanks, Mike, and stay safe.
I always look forward to getting a chance to talk with Paul Beatty. He's the president, associate portfolio manager of BT Global Fund, a fund, by the way, that is up, as I mentioned earlier, 23% this year. They were up over 60% last year. And I love the way they approach the markets. Paul, a great day to get you here. When you look at the action on Friday of the markets, we better start with that. It certainly was a wake-up call for a lot of people. They look and go, whoa, that's a lot of points going down.
Certainly is. Not the way I wanted to wake up on a Friday morning. But I think, as we were just chatting about, I think it's in many ways an excuse to have a pullback. And I'm fairly confident. We're due for a correction. Of course we are, after such a terrific run. But maybe it's 3-5% pullback and onwards and upwards from here.
Are you in the camp that says really the major market catalyst has been record low interest rates? The Federal Reserve, the Bank of Canada, look around, Bank of England, you name it, really with a lot of money in the system with those record low rates, fiscal spending, et cetera. My point only being because that hasn't changed, if you know what I mean. So people are looking, is this sort of a long-term change or a short-term change? Until that changes, maybe nothing meaningful in the market changes either.
Absolutely. The driving force is low interest rates. So you're going to get nothing from the bond market. And don't forget, the bond market dwarfs the stock market in size. So I think equities, there are lots of cheap equities, right? So that's what you need to hunt for. But the indices keep changing, right? They keep adding, Apple's a big part of the index now, right? So all those FANG stocks are, and I think I heard as much, if you include NVIDIA, it's 30% of the index is 8 names. So are they going higher? Yes, of course they're going higher. The markets, what else are you going to put? Where else are you going to put your money? Real estate, stocks, commodities, and you talked about last week. You talked about inflation. Inflation is running way north of any number the government's talking about, right? So they've even admitted to 5-6%. Well, if your bonds pay you 2%. And inflation's running 6%. And I personally think inflation in urban markets in Canada is running probably north of 8%. You better be investing your capital, to make higher returns or looking for higher returns. So, and interest rates, we don't believe are going to go up for years to come. I'm thinking 5 years, right? They may go up 1% next year or something, but we're going to have low interest rates for a long, long time.
And again, the kind of market action or the talk about a new variant coming out of South Africa that sort of really grabbed the markets on Friday. That's a great example of, Chairman Powell at the Federal Reserve has said they're going to be data oriented. Well, the kind of data that could come out of any shakeup there is certainly going to derail any plans for raising rates. And it just shows how fragile the system is. And I think extremely fragile to higher interest rates.
Absolutely. Even our government can't afford higher interest rates, right? So I think they're going to be down. They're going to stay low for, honestly, 5 years kind of thing, and maybe 10 is our view. So should be good for the markets. But
well, let's talk about the markets in particular and look inside and what you guys look for at BT Global. I was impressed with your return this year because certain sectors, it's not a monolithic market. I'm looking inside the market, and obviously there's some groups I'd rather be involved with and some groups I didn't need to be. as you said, there's 8 stocks that are so dominant. So you got to be in those 8 stocks if you wanted to participate. But you guys take a different approach. I mean, you look across the market, you look for value, you look for cash flow, and you go from there.
Yeah, exactly right. We're buying stock. We're fully invested these days. We're about 110% long and 25% short. So that for us is a full investment position. And we're buying stocks all over the place that trade at very, very low cash flow multiples. I've got one for you that's trading at 1 times EBITDA, which we can talk about. But no, we're buying stocks at 3 times EBITDA. I mean, unlevered companies trading 3 times EBITDA, buy them all day long. And I by the way, Canada, I think it's clear now, the Canadian market has actually slightly outperformed the U.S. market for the first time in 8-9 years. So we think Canada is going to have a good run here because there's quite a bit of value in our stocks.
Last time we had a chance to talk, you were talking about Legato, and Algoma Steel. Can you give us an update there?
Sure. Well, unfortunately, that's the one I was going to tell you about, trading at 1 times EBITDA. It's just amazing. And the stock has done nothing yet. The mergers happened. The SPAC merged with Algoma. So it's all now called Algoma Steel. ASTL is the symbol. And the update is management did their first conference call on the third quarter earnings, and everything's on track. And you've got a $1.9 billion company, but it's sitting on like $600 million in cash. And so the actual enterprise value has dropped to like 1.2 billion Canadian, and the current run rate is about that. They're actually generating $250 million per quarter in EBITDA. So this thing's awfully close to a 1 times multiple. Let's be conservative, call it 1.2 or 1.3 times. Anyway, look, Biden just signed the infrastructure bill, right? The Canadian government is spending money like crazy on infrastructure. So there's lots of stimulus in the steel, in the space that's good for steel. And you can buy this company at 1.2 times EBITDA. I don't really get it. I mean, there's not a single research report, by the way, written on the company yet. So I think the market, it's pretty obvious that the market's not fully attuned to the Algoma story just yet, but they will be. You can't hide these numbers. And of course, the issue is where steel price is going to be 6 months from now. And I don't know. I don't pretend to know, but I think you can rely on our governments to continue, to finance and promote infrastructure development in Canada. And so my bet is steel prices stay where they are, or stay healthy for the next couple of years. And I think you're going to see some buybacks in this stock, and I think you're going to see a dividend, and you're going to see some research reports. And frankly, I think the stock sort of has to go up, is our kind of take. And then you can buy the 5-year warrants if you want. So they're exercisable at $11.50. The stock's at $10.70. So they're almost in the money, but you got 5 years to play these things. And I think the stock goes to, $18, $19, $20 next year. And these warrants are going to go to whatever, $20 less $11.50 is, $8.50. You can buy them now at, under $3. So it's a big, big position for us.
It's, but I think one of the things you just said there, it's just not on the radar yet. When there's no research reports written on it, obviously you're not going to see buying in a lot of different areas. They need that, if you're a traditional investment firm, you need that research report, then you can move into it. And as you say, the story is fascinating there. So I suspect that, as you say, the reason it's still at a low level of valuation is that there isn't a lot of attention being paid to it. Plus, it's an old name that had trouble. So you need the updates for people, and they're just not there yet. So, of course, that creates the opportunity to be a buyer before it's high on the radar. As Victor and I always say, it gets to page 1 and moves from page A13.
One thing I can tell you is the research reports will be coming. So are they going to write negative news about a company trading at under 1.5 times EBITDA? I don't think so. The other thing is, this is not a small company, right? It's if you eliminate the cash, it's a $2 billion company. Well, I can tell you a $2 billion company will go into the index. So I can't tell you what month it's going to happen, but I'm betting on next year you're going to see Algoma Steel, just like Stelco, in some indices in Canada, and therefore the institutions are going to have to buy it. So I really, and by the way, they have no debt. Yeah, you can go bankrupt in a steel company, yes, but you can't do it when you have no debt, right? So, and by the way, the Canadian government has decided to give them $450 million to help them expand into their new technology, right? These electric arc furnaces to make steel in a more environmentally friendly way. So, what's not to like? In fact, these guys are going to be able to go around North America saying they are the greenest of steel companies on the continent, and that whole idea of investing in good ways, right? Do something good for the planet. This is all going to fit in with Algoma Steel, so we love that. Anyways, again, Canadian stock market inefficient and good value, So that's why we're fully invested.
You're talking about one of the themes that I've been talking about on Money Talks for 2 years now, and that is the move into renewable resources, the move into electric vehicles. Well, one of the things, and you might smile at this, I've got a lot of heat for saying, well, tell me what your practical plan is. Where are you getting the copper? Where are you getting the nickel from? Where are you getting lithium from and cobalt? We just had the news this past week where Hunter Biden's firm has arranged or facilitated a purchase of by China of an American company, $3.8 billion cobalt company, which further entrenches China as the lead player in that, which a lot of people think that means cobalt prices are going to go up. They're not going to be, they're not our best friends there. But I wanted to get your take on both. The move to renewables, what that means for demand for a lot of the resources, mineral resources, and the rare earth minerals also that are involved if you're going to do this.
Yeah, I think, to simplify it, coppers, it's clear as can be that if you believe in the electric vehicle trend, and it's going only one way. So we're going to, if you think we're going to go with electric vehicles in Europe, North America, the rest of the world, then where are you going to get the copper? And by the way, you need it to not only for the cars, right, but the trucks, but you need it for the charging stations. And you need to build something like 6,000 charging stations across Europe. I mean, okay, so fine, that's all going to happen. Where's the copper going to come from? So you don't have to get into too many of these more exotic metals. Just get that one right. And we also know that China has no copper. Okay, so where are they going to get it from? Where's the world going to get it from? And there are not that many good copper investments or opportunities. And so get yourself a very healthy position. Goldman Sachs wrote it up the other day. They fear that the copper could actually spike to, they did it per ton, like $13,000, I think, per ton. Anyway, a long way from where we are now, basically a doubling and a half on copper prices. Well, copper, so let's go back to pounds. It's trading around 440 right now. So copper, $10. That means every copper stock on the planet is going up, threefold from here or higher, right? So I don't know. I think we've made it. Anyway, we've looked at lithium, graphite, cobalt. Just gets more and more complicated when, in fact, it's a pretty simple theme.
Well, a part of that theme being has been one, and I'm proud to say we featured it on Money Talks, is when you get years of underinvestment, and oil would be another example of that, but underinvestment in the resource sector. Somehow Canadians seem absolutely determined not to take advantage economically of this trend, but investors can still. Sure. There's more than Canada to play, but I'm actually astounded by it. The same people who are pushing renewable energy or electric vehicles seem to be opposed to the resource development that is absolutely necessary if indeed you are going to go to renewable energy. But as I say, we don't have to make the money here. We can look outside the boundaries. And is that what you're doing at BT Global, looking far afield for opportunities in these kind of areas?
That's right. You find these international energy names that trade in Canada. Touchstones are one of our biggest positions. I mean, it's a fantastic story. It's down in Trinidad, and where they need gas desperately. Well, guess what? They found the gas. They found a lot of gas, and it's still a small cap stock, and it trades nowhere near its intrinsic value. And they've already found it. Before it was speculative whether or not they were going to hit the mother lode, and guess what? They did, and the stock has reacted positively, but not a whole lot, right? So it's anyway, trading far below its intrinsic value. So there are a bunch of these names, international names listed here in Canada, and I think the energy space is still very cheap, right? So we're not energy experts, but you can just pick and choose. And I think the whole sector is trading around 3 to 4 times EBITDA, which is very good value.
Let me ask, I'm jumping around, but it was something you talked about at the World Outlook Conference, was the U.S. side of the cannabis industry. And, it seems like I'm reading more and more, even Republicans presenting plans or legislation that will legalize it there, which, of course, opens a big door. And, of course, it's already legal in many states. I'm just saying when you get it at the federal level also, it looks like a trend that's going to continue. Just give me your update on the cannabis industry, because I'm looking at a lot of those stocks are much closer to a bottom than they are to a top. I mean, they've had a major correction. So I'm wondering what do you think of those?
Yeah, major corrections. The only way to describe it, I think it was February last year, February this year, 2021, they kind of peaked, and they're all down about 50% from there. So a heck of a setback. And it's all about, I guess, the excitement. When the Democrats got in, we thought we'd get some legislation, just descheduling it as a narcotic and legalizing it federally, and therefore people can list their shares on the New York Stock Exchange instead of the Canadian Stock Exchange, and these stocks would have all done very well. Anyway, that hasn't happened, right? Nothing seems to be getting done in Washington. So that's disappointment, but every one of these companies is stronger than they were, 6-7 months ago. They're still growing. Their moat is getting larger, and they're more entrenched. And south of the border, these companies are quite profitable. So stocks are on sale. Business is better. I say you maybe upgrade the quality of your investments. Pick the larger players, but I think they're the cheapest stocks in North America today, like cheap consumer-focused stocks, for instance. And so I also think it's very clear. Some of the politicians in the States were saying, we want entrepreneurs to be in this business in the States, not big money. Because if they open it up too easily, who's going to buy all these companies? Well, it's going to be big tobacco and big alcohol. And they're for sure they're going to want to move into this space, I think. And they'll buy everything. So I think it's great. You're going to get a chance. It's going to happen more slowly, but you're going to get a chance for entrepreneurs and investors to make outsized returns. And then north of the border, these Canadian stocks. I mean, we're short basically all of them, and they really have had a very, very tough time. We don't think that's going to change. We just don't think the business is going to be very profitable up here. None of these guys seem to be able to be positive cash flow companies, and so I'd be very, very cautious, and I just avoid the Canadian names, period, and put your money south of the border.
Let me throw out a couple other things. Well, let me just have the quick, and I know this is a broad-based question, but when you at BT Global buy a stock, what kind of general time frame are you quite prepared to hold it for?
Well, ideally, you find stocks that you hold for 10 years, right? So 40% of our portfolio, we basically do not trade, because we have these kinds of stocks that we just, we like very much. And as the fund grows, we in fact just add to the positions, right? But the other 60% of the portfolio, we trade very, very actively. So it's tough to answer that question. I mean, on our short book, I can tell you we take a much shorter viewpoint. We had some success this last month, shorting some of these high-flying tech names. Zoom Media, we're on a Zoom call right now. Well, we're short Zoom stock. They came out with decent numbers, but they guided lower, right? They just said, pandemic's coming to an end, and therefore business won't be as good, and the stock goes down 25% in a day. Lightspeed, we did as well. The stock was down 33% in one day. Why? Because the thing was so crazily overvalued. So those types of shorts we do cover, cover the next day kind of thing. On the long side, I don't know. I mean, we've got some stocks. I was with the CEO of Champion Iron Ore last night. It's such a wonderful story. I mean, we got in at $1. The stock went to, I don't know, high as $6, I think, but it's checked back to around $4 today. We are not selling this stock probably ever. I think this guy's going to build one of the largest iron ore, high-grade iron ore, right? The stuff everybody wants for these electric arc furnaces, the future of iron ore, the future of steel. These guys have world-class stuff, and they've got 50 years of reserves. And I just think this is going to be one of the biggest mining companies in the country. So buy the stock and never sell it. That's what you're ideally looking for. And by the way, Algoma Steel, I might put in that category as well. I think something to buy and hold. Some of these copper stocks just get positioned and don't even look at them again, right?
Let me just finish with time's short, but just to get a quick word on you on sort of the precious metals industry, precious metal stocks.
Well, the cryptocurrencies now accumulated value is $4 trillion. I was told the other day, $4 trillion, and I think it's pretty clear that that's taken a whole lot of the excitement out of the precious metal space. I mean, I think the precious metal space is around 11 trillion. So is it? I think if you include gold and precious metals themselves, so big demand being sucked away by the excitement of crypto. I think though, I think it's gonna. We're fully positioned. We're 20% of the fund is in precious metal equities. But it's largely because I don't know where gold's going to go. And I'm not sure it's going to double or anything. But where gold is today, these companies are very, very good value, the ones we own. So I like it, and I think, but I do think gold's going to trend up. I mean, inflation is running at 6-7%, 8%. Gold's almost has to go up, and it's getting more and more difficult to get it out of the ground. In fact, you saw the takeover. A couple of takeovers were announced this fall. There are very few gold mining companies you can even invest in this country, right? So you're getting less and less supply of investable assets, and you're getting, I think, growing demand. So I think it bodes well. Crypto, I'll leave you with the one thing on crypto, which is very clear to us. You see, yesterday the stock market goes down 2%. Look at what happens to the crypto space. These stocks, crypto itself's down 5 or 6. But some of these stocks are down 15 to 20. So I think you're just buying volatility in crypto land. And we're in the business of trying to avoid volatility. So we're a little more comfortable in precious metals.
People, for more information, go to btglobal.ca. Paul, you can buy the fund right through your regular financial institution, your investment professional, et cetera. It's btglobal.ca. Just one quick thing. Is there a minimum investment to be part of the fund?
Well, we actually opened a trust over the summer. And the only thing the trust does, it's RSP eligible. The only thing the trust does is invest in the fund. So there's now a way to get in the trust through your RSP, and the minimum's much, much less. It's we're down to $15,000 perhaps, something like that, whereas the fund is $50,000.
I'm glad you brought that up. That slipped my mind, but it's BT Global Trust then, and they can buy it in that way, as you say, RSP eligible for people who are looking for growth in a fund that plays both. And I love this part, by the way, can play the market to go down or individual stocks. The majority is still going up, but playing it within that or investing within that framework. As I say, the track record is exceptional since its inception in 2006, I think it was, an average return of around 13%, up years, down years, you name it. And of course, the last couple of years has been spectacular. So people could have a look, see if it's appropriate, btglobal.ca. Paul Beatty, I'll see you at the World Outlook Conference this year. Get all warmed up for it. We'll get some updates. We'll get some new stuff, all sorts of things. But Paul, thank you for taking the time today and look forward to chatting with you at the Outlook Conference.
Great, Michael. Thanks very much. Always a pleasure.
Great
Keep
stuff.
up the good work.
And just a reminder, everybody, that if you book your ticket, as I said earlier, Border Gold, we've got a 1 ounce silver maple leaf we've got 100 of them. I'm asking for more, but Border Gold's working on our behalf on that. But we've got 100. So if you book your tickets by going to mikesmoneytalks.ca, click on the events page, buy your ticket, then the first 100 at least get a silver 1 ounce maple leaf. And I promise we are working on getting more because I know this will sell out. So don't wait on that one. Just go to mikesmoneytalks.ca. Time now for the shocking stat of the week. In a moment, by the way, I'm going to tell you how you can be one of 5 people to win. Are you ready? A 10 billion dinara bill. That's right, 10 billion dinara bill. But first, let's get to that shocking stat. Actually, I have 3, and they're all about inflation. They're courtesy of the acknowledged global expert, Johns Hopkins economist Steve Hanke. With the Turkish lira hitting an all-time low, the inflation rate in Turkey is now about 73%. With the Lebanese pound hitting all-time lows versus the US dollar and other currencies, the inflation rate is about 216%. And finally, in Venezuela, are you thinking about those numbers, by the way? In Venezuela, with President Nicolas Maduro's Socialist Party it won handily in this week's regional elections, no surprise, the bolivar's digital value has crashed, which pushes the country's inflation rate to over 480%. And by the way, the irony is that Venezuela introduced that digital bolivar to sort of slow down inflation because they'd tried just about everything else. You might remember they issued a 1 million bolivar bill. I think it was in March, and that couldn't even get you a cup of coffee. But there are many other examples in history of paper currencies that become worthless. I collect many of those, by the way. That's why the dinara, the $10 billion I'm giving away, is kind of cool. But they all start with printing a lot of money. As government then erodes central bank independence. But what's related, it's related, but that's not how hyperinflation actually occurs. Many people don't get this connection. Yeah, it plays a part to create the money, but only in so much as it spurs on a loss of confidence in government and hence the currency itself. Politicos don't seem to be able to understand the concept that confidence ultimately drives the value of currencies, every other investment market, which is why, by the way, on Money Talks, we continue to monitor events and we ask the question, does this specific policy, for example, or political action increase or diminish confidence and trust in government? That's why it's important. The whole financial system is underpinned by confidence, or in the case of the 3 inflationary countries I just talked about, a lack of it. I think it's also important to understand that confidence can change in an instant in the investment markets. And when it does, look out. I mean, we saw that in the overnight credit markets on September 16, 2019. Overnight interest rates to borrow went from 2 to 10%. Oh, come on. It happened to February 220 through March 23rd, 220, when average stock values dropped 67%. Yeah, we'll see how Friday works out longer term, but that was a pretty dramatic drop too. But declining confidence in government can also push prices in other areas, but it pushes the other direction. For example, if people flee government bonds because they don't trust government, well, some of the money is going to end up in stocks, already has, gold, Bitcoin, other assets. One more point. Governments and central banks have never accurately predicted when declining confidence will reach a critical point. And you know what? I don't think they're going to get it right this time. Now, back to that giving away $10 billion dinara bill or $10 billion dinara bill from my personal collection. All you have to do is go to mikesmoneytalks.ca, mikesmoneytalks.ca, click on that services button. It's up at the top, and sign up for Michael Campbell's free e-service. Go to that services button on mikesmoneytalks.ca, then sign up. It's free. Michael Campbell's free e-service. That's it. And we're going to make a draw this week, and we'll announce the winners on next week's show. And yes, this bill is free and it's cool. I look every week and there seems to be more things about real estate, which is why, by the way, and just a reminder that we'll be talking real estate at the World Outlook Conference. The track record, and it's really thanks to Ozzie Jurek, has been magnificent when you look at recommendations, even in the depth of the subprime crisis. We came out the next year saying, hey, look out, big time. You can make a lot of money. Ozzie took us down to the Phoenix area, talking about where money goes, where people go, that kind of stuff. But also a reminder that this is the beginning. We did this last year. We gave away a 1 ounce silver maple leaf coin, 1 ounce silver maple leaf coin. We've got 100 of them. So if you book your ticket, you better do it quickly, though, because these things, that was so popular last week, I couldn't believe it. But buy your ticket, you get your 1 ounce silver maple leaf coin, and I think it makes one of the great stocking stuffers or Christmas gifts. You thought, hey, what can I give that person? I love it. As I said earlier, give away that 1 ounce silver maple leaf. Just do it by going to mikesmoneytalks.ca, by the way, mikesmoneytalks.ca. Click on the events page, presto, right there. We got 100 of them. As I say, last year they sold out incredibly quickly. I better start negotiating right now to do another 100, but we'll leave it at 100 right now. That's all I can guarantee. But I want to bring in Ozzie Jurek because obviously, Ozzie, one of the really big stories, or the biggest story, especially if you live in the area, lower mainland of Vancouver. Now we've seen flood problems, tremendous human hardship, by the way, but let's just talk about the business of it, flood problems, et cetera. And here's the thing I was asking about. What impact is that? And we've had fires, of course, recently in Alberta, in British Columbia. What does that mean if you're sort of trying to get a pre-approved mortgage?
Well, it's really important that people realize that. When we talked, I guess, a couple of months ago about the fact that insurance companies say, you know what, if you're close to a zone that had a fire in it, we may not put insurance on it. You got to figure out what that means. Is it 25K away if my house is there? Or if my house is on a lake, do I qualify? You better be sure to put in a clause that guarantees you subject to financing. Now, the big thing is that we just learned from one of my OSBAS subscribers that they were told by their credit union that even though they had a pre-approval, they say at this time we're putting a temporary stop on new lending in Abbotsford and Chilliwack. Until the assessment of the area has been completed, we cannot offer financing. Now, this is the only one that I know, but there may be others. But here we are. You thought you were pre-approved, and guess what? This is an extraordinary circumstance. So make sure you still put that clause in your contract.
But that it's such a key, though. It's the kind of thing that we get excited. We want to buy a home and but we have to take a step back and say, okay, if the circumstances change and the tragedy of what's gone on with these incredible floods and the fires previously, maybe a game changer. And as you say, Ozzie, it doesn't cost you to go and ask, is your pre-approval still on? And then the other side you just mentioned is, can you get insurance in that area? Because that's an important consideration with a home.
You can't get insurance, you can't get a mortgage. The other very quick thing is that if you do write a clause, we've been teaching for years that subject to buyer receiving a mortgage, normally we say, well, you should say receiving and approving mortgage on everything. Subject to the buyer receiving and approving the strata minute. Subject, to the depreciation report, no. Subject to reviewing and approving it. That way you have saying, hey, I might have got 2 years worth of minutes, but I don't like them. But if I said I just want to receive them, well, you receive them. Receive and approve is an important part of a subject clause.
So again, let's do it. Receive and approve. Let's make sure that if you think you've got a pre-approval, that it's still good. And let's make sure that you can get insurance on the property, have things changed that way. So let me just throw one more at you out of left field here. You know what, Ozzie? I've been hearing and reading a little bit that we may see more stringent stress tests coming as, again, we get the normal worries about Canadians have got too much mortgage debt. But, will that spell a new stress test, or what are you hearing about that?
Well, the interesting thing is that this week on Wednesday, Peter Rutledge, who's the superintendent of financial institutions, he's warned about a marginally more fragile household credit situation. He alluded to the incoming implementation of new capital requirements for banks under the Basel III protocol, which actually means that those requirements might have to increase for banks. But then he told the public to stay tuned for the outcome of the annual review of the minimum qualifying rate, which of course you and I know is a stress test, right? So that's really under review. And then finally cautions under the use of home equity lines of credit that he feels are outlandish because they're going up to 80% of lending in his view. And so he is obviously taking aim at the mortgage market and real estate.
Well, again, something else to be aware of. But what still always puts me aback when you talk about mortgages is you've got lending institutions whose job it is to assess the individual risk of a transaction. I mean, that's their job. And if they're any good at it, then they've proven to be pretty darn good at it. You look at the subprime mortgage crisis. You even look at in the last couple of years, we haven't seen some big jump in mortgage defaults or mortgages in arrears. So obviously the lending institutions, whoever they are, have done a pretty good job of assessing that risk. And that's still who I think it's the job of. That's their money that's at risk there.
You're so right. And when you look at the numbers, we're less than 0.5% nationally. And actually in British Columbia, where we have some of the highest mortgages, we're at 0.0 something. So very low default rates against all warnings. And in fact, people in Canada make their mortgage payments. And as you say, our banks are pretty good at looking after who they lend the money to.
Good stuff as always, Ozzy. I'll tell people to go to ozbuzz.ca, ozbuzz.ca, get the latest from Ozzy Jurek. In the meantime, have a terrific week.
Thank you very much, Mike. And I just wanted to leave you with this thought, and you might be proud of me, is that I'm on a 20-day diet now, and so far I lost 10 days.
Oh, way too many people nodding their head at that one. Ozzy Jurek will be back. I've still got Victor Adair, and I still have a Goofy Award. Stay with us. Well, we've been chatting about it up front with Paul Beatty, and of course, it's been quite a week. Well, at least the finish of the week certainly grabbed people's attention. I wanted to get Victor Adair in here live from the trading desk after a busy Friday for him, I'm sure. You know, markets closed on Thursday in the U.S., reopened on Friday, and I guess when they opened, Victor, we were already down a whole bunch, at least when people got out of bed.
Yeah, well, the markets actually reopened on always get mixed up, Thursday afternoon. I had been short of the stock market from Monday, got a good pop out to the downside, and actually got turned around. But when the markets opened Thursday afternoon here, that's the futures markets, it was just nothing but down. And I was out of the trade right away. So when folks came, as you say, you know, to the normal cash market, I mean, the Dow was already down 1,000 points on the Friday. And this is Thanksgiving. You know, Thanksgiving is like the biggest 4-day holiday of the year in the United States. And where I'm going with that, Mike, is liquidity risk. I mean, there's just nobody there to be the bid if you want to bail out of your position.
And of course, liquidity is always at least my biggest fear. I mean, when you have liquidity problems in the market, otherwise you want to sell and there's no buyer on the other side, that's when you get these waterfall moves. You know, confidence is gone. And that's the other thing is like, it's just another reminder, and I alluded to this a little bit earlier with our shocking stat, but how fast confidence can leave, or, you know, in other words, how fast people's risk. And I guess it comes at a time, Vic, that you talked about this a couple of weeks ago. You couldn't believe the complacency. Well, it certainly got some people, some complacent people's attention, you know, on Friday.
Yeah, the old saying is that risk happens fast, and holy mackerel, did it ever happen fast this week. I mean, the market has had that complacency, and in a way, you know, I understand it. It's like people have bought into the story correctly that the stock market only goes up, you know, I mean, and then there's Tina, there's nothing else to do with your money. Well, that's not exactly true, but, you know, there's that thinking. And then, of course, there's that fear of missing out. Everybody around you is making easy money in the market. How come you're the stooge that's standing on the sidelines, you know? So, but some of these other risks, I mean, positioning risk is really key for me. We came into this with, as I say, that complacent attitude, but people were just long a risk on sentiment in the market. And that was across whether it was currencies, commodities, stocks, interest rates, whatever. And on a short-term basis, I think a lot of the market was positioned that the Federal Reserve was going to be forced to raise interest rates more faster than they were expecting. I'll tell you what, with what happened here today, that's off the table. You know, that's just one of the things in the interest rate market, a real surge in bond prices as interest rates fell sharply.
Let's, I want to ask you, you know, like, so there's a lot of uncertainty. We're talking with Paul Beatty about that. Like, is this new variant serious? And they're like, let's be clear. They said that it might be more transmissible, but there's no data to say that it's more, it'll make you any sicker. So we don't know. I mean, there's just a lot of unknowns in a marketplace where, as you say, people can sort of say, I can take some money off the table, lock in my gains, whatever it is. But what will you be looking at now? It's here we are on the weekend. Your market's open on the Sunday. So what do you be looking for?
Okay, Mike, I came into this week, the only position I had on, honestly, I think so. It's been a busy week. But my basic position was I was short gold. Gold had a very sharp run up, about $100 in 2 weeks. And a lot of people had lunged into that market, and I thought it was overdone. So I was short gold. Gold just, I got lucky in that maybe gold fell off about $50, and I got turned around and went, the other way, took a long position in it. I liquidated that long position here today for a $10 gain. And my thinking was, I don't want to be long gold here, because I could see where people who are bullish in gold and own gold might be forced to sell it because they need the liquidity to, let's say, support a position they've got in another market. You're long some stocks, you don't want to sell them, whatever, so you sell your gold. So I'm going into the weekend flat. I don't need to trade a market like this. Certainly I'll be sitting up paying attention on Sunday, but looking ahead, I would say with the stock market, the acid test is going to be whether or not this market holds the lows that we made in September and October. And that's about 1,000 Dow points below where we are now. The Dow's dropped, 1,800 points or so in the last 3 weeks. So it's not a long way away. I think that would start to rattle some cages if we took out those lows, because up until now, we've had a 5% decline from the all-time highs in the Dow 3 weeks ago. Up until, the beginning of September, October, we hadn't had much of a setback. We had that little setback and then rallied the new all-time highs again. So, yeah, for me, I'll go into next week flat. I don't need to have a position. I have no idea the potency or how quickly the COVID thing could spread. I'm not going to try to trade that. I just look at the market action. And for me, the alarm bells would start to go off if we break those lows we made September, October.
Well, you'll be here to chronicle it with me next week. There's going to be a lot of action there, as there has been this past week. I appreciate you finding time, Victor. Enjoy your few minutes on Saturdays that you get off, because you'll be back at it Sunday.
I certainly will, Mike. Honestly, I wouldn't miss it for the world.
VictorAdair.ca, VictorAdair.ca. Go there, look at the chart. You get a fuller view there. I love it. Picture tells 1,000 words. Go to VictorAdair.ca. Stay with me. I got a Goofy Award coming up. Time now for this week's Goofy Award. I posted this earlier this week, and in case you missed it, it's something that I broadcast 10 years ago. That's what blew me away. It was on December 10th, 2011, 10 years. But what's amazing is that absolutely nothing's changed. In quotes, green is the easiest virtue. What is consistent, whether we're talking about the billions wasted on the gun registry or regional development schemes, and in this case going green, is that practical reality is foregone. And with the right progressive cause, safety of women, job creation, and of course the environment, practicality goes out the window, and the vast majority of Canadians will cheer on bad policy, especially if it's paid for by our children. End of quote. As I said, remarkable how nothing's changed. But I'll tell you what also hasn't changed is the reaction by some people. Well, maybe I should call it vitriol. That's more accurate. For demanding practical solutions as opposed to empty virtue signaling and grandstanding. Well, sadly, COP26 provides a textbook example. Many are calling the latest climate fest, complete with private jet, lavish parties, and a carbon footprint, by the way, that was equal to 10,000 UK homes annually. They're calling that a fiasco. Well, certainly when it comes to actions matching the rhetoric it was, which brings me to this week's Goofy. Let me repeat, I am not discussing the merits, the pros or the cons. I'm simply pointing out that the actions don't match the rhetoric, and it's regularly happening. First up, think about this. Within a week of COP26, the Biden administration announced plans to sell leases to oil and gas companies on more than 80 million acres in the Gulf of Mexico. Government's own analysis says that's going to generate about 1.1 billion barrels of oil, 4.42 trillion cubic feet of natural gas in the coming decades. Well, that's not quite what activists had in mind when at COP26, the president declared the U.S. was back with a leadership role in the fight against climate change. I mean, the Biden administration claims that a court ruling forced it to sell the leases unless it gets congressional approval to halt them. But opponents like Drew Caputo, he's a lawyer at Earth Justice, said there are lots of legal avenues available the president didn't even choose to explore. And as I said, that doesn't match the rhetoric we heard at COP26. Let's add that before the conference and after, the president was actually imploring OPEC to increase oil production, in order to bring prices down. Further, as the Wall Street Journal states, having begged OPEC in vain to boost oil production, Mr. Biden's now having to suffer the humiliation of beseeching an American industry he vilifies as destroying the planet to save the day. I mean, the effort to lower prices was furthered this week, as I was chatting with Michael Levy about. The U.S. announced it would draw down 50 million barrels of oil starting next month from the Strategic Petroleum Reserve. I mean, come on. And of course, you'll get help from South Korea, India, Japan, and the UK with 22 million more barrels. But this is all to get oil and gasoline prices down, which is contrary to the express goal of getting higher gasoline prices through a carbon tax, which would discourage driving. Come on. I mean, think about that. I mean, the moral of the story, political considerations overrule climate change and anything else. I mean, talking green is high on the list until it starts costing votes. That's all the time we have today. I just want to remind you, by the way, that we've just kicked off. We've got 100 1-ounce silver maple leaf coins. And thanks to everybody at Border Gold for that, for making this happen with us, working with us. The people at Border Gold said, yeah, we'll find a way of getting from the Canadian Mint 100 silver maple leafs. We're going to give them away. They went like hotcakes, if that's an expression, last year. I'm still working in Border Golds on our side on this, trying to help us get even more. But in the meantime, all I can do is guarantee the first 100 people who go to mikesmoneytalks.ca, click on the events page, sign up for the World Outlook Conference, which is happening first week of February, 4th and 5th. And then you'll have access to it every day since, because we've got the online version, which was great, worked out really well last year. But sign up for that. You get your 1-ounce silver coin. It's kind of a fun thing. And I was sincere when I said, I love these things as little Christmas gifts or little stocking stuffers. They just grab people's attention. There is something about money, but this is better than a dollar bill. No, well, if you can get a $1 bill, you'd be lucky. No, better than a $5 bill, a $10 bill, a $20 bill. No, it's kind of fun. You get a 1-ounce maple leaf silver coin, especially, by the way, I've given it to nieces and nephews, etc., because it gets them interested, which I still think is the number one way of helping kids. Buy them a few shares of a stock or give them a 1-ounce silver maple leaf. I'm telling you, they'll start watching the price. They kind of think it's cool. They keep it in a safe place. So take advantage of it. That's mikesmoneytalks.ca. Go to the event page. And in the meantime, I hope you join me every day on Money Talks tweets and Michael Campbell's Facebook. This is a place where you can get, I can tell you, I look at what the mainstream media is talking about. I look about what we're posting. You just don't see a lot of the stuff in the mainstream media. And it's part of the overall discussion that we need to have, facts, figures, that kind of thing. So there you go. Why don't you recommend it to a friend? Why don't you join me myself? And remember that 1-ounce maple leaf silver coin, thanks to Border Gold, just go to mikesmoneytalks.ca.
You've been listening to Michael Campbell's Money Talks. Subscribe at moneytalks.ca or through your favorite podcast subscription service. Join us on Facebook at Michael Campbell's Money Talks and on Twitter at Money Talks Tweet.